Okay. Welcome you all once again to K Trading Institute. If you can hear me, you can hear my voice and see my screen. Please let me see hi on the chat session. Okay, we thank God. Make sure you mute yourself when you join to avoid back noise. Make sure you try to mute yourself when you join to avoid back noise. Okay, for us not to waste much time, let's start. Okay, we said how to what? Look for entry points or how you can read your market entry. And from me, before you can get entry, you need only three things. You need to know some three things from the market before what? Placing a trade. And that one is what? Market trend, which is the major one. You need to be able to identify your market trend. And then under the market trend, you need to know your swing point, like your turning points, area of price might be getting rejection, and area of price like that. And then you need to know your market structure or the nature of the market. You need to be able to identify the market structure or the nature of the market. And then you need to know whether the structure has been broken or we have been sitting. The structure has been sifting or we have been broken my structure before what you able to mark a certain point as your interest point or QI or your entry point. So going according to all these three things, it just is combined. This one come together, making it one. It comes together, makes it one. That's why we said class action, it has a different kind of strategy, but you combine them to make it one powerful strategy. It's just a matter of how you will be able to watch, looking at the chart, your understanding of what the market. And also, there's one thing you need to know. Every time you open charts, knowing that you are going to follow the market movement, not what you think. We always trade what the market does, not what we think. And also, when you open your chart, a new page, just knowing that you know nothing about the chart. So trying to able to identify a certain case before what you make a decision. So let's consider, let's say we want a trade. Let's consider this this example here. Let's say we have something like this. We all know that this is what? An uptrend, right? From the weekly time frame, we have something like this. We have something that price is pushing to the upside, right? You have a low, or this is a low. We may having some maybe a high around this area. We're having something like this. We may having something like this here. Okay, so this is an uptrend, whereby we get what? Low, high, low, and then high, and the price recently creating what? A low. So from the weekly time frame, the psychological behind this trend from higher time frame to the lower time frame is that from the weekly time frame, from the higher time frame, whenever we have something like this, meaning that look at this thing here, this candle here, this bearish candlestick here, is going to create it's going to what? Give us a lot of what? A bearish candlestick from what? From the daily time frame, right? Which is 7 candlestick, meaning that we are going to have a trend channel. That means from the weekly time frame, from the daily time frame, looking at this point, that means from the daily time frame, this is what we have there. We have this thing, a high, a low, a high, a low, a high, and then this low here, this bearish candlestick here, 1, 2, then it will cause us what? A break of what? Market structure. I hope you are getting me. So this phase here, meaning that we are getting an what? An impulse from the weekly time frame. If we are getting an impulse from the weekly time, going to pass what? I hope you are getting me. Please make sure you mute yourself. Don't let me mute for you to avoid back noise. So this bearish candlestick here, meaning that from the weekly time frame, this phase here, we having a lot of what? Trend in between in daily time frame, right? So in a daily time frame, we are going to get what? A break of what? Market structure, right? If we are able to get a break of market structure on the daily time frame, meaning that it gives us what? A confirmation that this price, this daily from the weekly time frame, we are now going to what? A retracement. That doesn't mean we are in what? A downtrend. We are still following the weekly time frame. The downtrend we are going to, or the shorting opportunity that we are going to looking for, is what? The import, the retracement of what? The weekly time frame. And we all know that from the weekly time frame, we are expecting price to come to where? OB. I hope you are getting me. So meaning that from the daily time frame, price may leave us what? A supply zone around maybe here, right? So let's say okay, let's consider around this area. Price may leave us what? A supply area around this this zone, as it created something like this, meaning we are going to get what? A reversal to that area, then we start what? Selling from there. I hope you are getting me. So from this retracement here, from the retracement to from weekly time frame retracement, we are going to get what? A downtrend channel from the daily time frame. So meaning that we are still going to looking for what? Shorting opportunity in the what? Daily time frame, until we reach what? Order block. I hope you are getting me. Until we reach daily time frame order block. So we are going to looking for shorting opportunity to what? We reach daily order block. Sometimes price may not what? Get to this order block for you to able to know that price is about to change and follow the uptrend on the weekly time frame. What you are going to get is that you are going to see a breakout. We are going to see a recent breakout, right? We are going to get a breakout from where? From daily time frame, meaning that we got what? A shift of market structure, right? We got a shift of the market structure from the daily time frame. We are still reading daily time frame, weekly time frame, plus the daily time frame, how we combine them together. So from the daily time frame, let's say this is the weekly and the monthly, it's all can be the same. From the weekly time frame, this is what we are from the weekly time frame when we are about to reverse When price is about to reverse to the upside, we are going to get what? A shift of what? Market structure from where? From the daily time frame. Hope you are getting me. So when we break out from the recent swing high from the daily time frame, then we are now what? Following the major trend. We are expecting price to come back to our interest zone. The same thing here before continuation to what? To the upside. Then we target what? Weekly time frame, which is the next what? The next swing high. I hope you are getting me. The next swing high from where? From the weekly time frame, right? Yeah. So the same thing happened to daily. Let's consider, let me delete this one. Let us consider this chart is what? Is for daily. I hope you are getting me. We all know that we don't base on weekly to we don't base on weekly charts to placing a trade because we are daily traders, and we don't base on daily chart towards placing a trade because we are what some few hours traders. Our entries always come from where? From 4 hours, 1 hour, and then minutes time frame. I hope you are getting me. So anytime, let's say this is what for daily chart, it's the same psychology, meaning that if this one is a daily chart, we are going to get something like this in 4 hours time frame, right? So before you place a trade, before you look for selling opportunity, you have to get what? A shift of market structure from where? From the 4 hours time frame like this. When we get a shift of market structure, price or what will come back to the interest area, then you start what? Selling from there. Your stop loss will below above the key level. I hope you are getting me. The same thing happened. Let's say we having this one in 4 hours time frame, meaning that in a 4 hours time frame is when price is uptrend. We are looking for what? Buying opportunity. Then 1 hour time frame, 30 minutes time frame, we are going to get something like this. We are going to get a shift of market structure from 15 minutes, 1 hour time frame before what? We look for entry. So when you go to the 15 minutes time frame or 1 hour time frame, when price is uptrend like this, and when you go to the 15 minute, let's say 1 hour time frame, when you go to 1 hour time frame and price is what? Break a market or shift some market structure there, then we are about to what? Meaning that from 4 hours time frame, we are looking for what? Retracement. I hope you are getting me. So yours is that you know where price is what? We know where price is what? Trying to fall to where? From 4 hours time frame. So when price get to that key level, you don't need to what? Looking for shorting opportunity again. You are rather waiting for, let's say, from 4 hours time frame, we have this thing here. So if price reaches this order block here, you are no more what? Looking for you are no more looking for what? What do you call it? Selling opportunity as from 15 minutes time frame and then 5 minutes time frame and then 1 hour time frame. But you are what? You are going to looking for buying opportunity. But before you buy from 15 minutes or 1 hour time frame or 30 minutes time frame, you need to get what? A shift of what? Market structure like this. When we get a shift of market structure around this area, then retracement to where? To this area, then we target what? 4 hours next high, 4 hours TP. I hope you are getting me. We target 4 hours TP. So the thing is that reading the entry is just a simple, but just that we don't have patience, we don't know how to go about it. We don't know, we don't know where to base. People are saying we should have waiting for candlestick pattern or like engulfing and then pin bar shooting start to form before we enter. As soon as the price is in your area, yours is for placing a trade and put your stop loss below the key level. I hope you are getting me. Yeah. So I think that is all about how we read the market entry. For now, if you have any question, you can ask, then I will assist you. You can unmute yourself. Martin, do you have any question?
No, don't have any question yet.
Okay, TZ, do you have any question?
Yes, boss, I have a question.
Yeah, let me hear you.
My question has always been this. Most of the time, price does not come back to that other block. It's actually maybe stops on the way and then starts moving up. It usually doesn't come to that other block, and it happens most of the time.
Okay, that is why I was saying that. Are you listening to me?
Yes, boss, I'm
We are
listening.
not always looking price to come to order block. We have different kind of areas. That is supply, support, and then what? Order block we are talking about. So definitely this price or what will come to one of this area. So that's why I'm saying that maybe from the daily time frame we expecting price to come back to this key level, but all of a sudden we're not able to price fail to come there, meaning that from the 4 hours time frame we were having this lower lows and lower highs from the 4 hours time frame. So if what will help us to be able to identify the price may not go to the 4 hours, which is order block or some interest area that we are expecting price to come. We are going to get what? A shift of what? Market structure. I hope you are getting me. So if price able to what? Break out from recent Shanghai, right? Because the trend is what? Before the trend will get over, unless we break out from recent Shanghai or recent Shinglo. So if price break out from recent Shanghai, meaning that now we are what? We are going to looking for buying opportunity, right? So anytime you see that price fail to come back, let's say, okay, sometimes too, you may see some we having a high, a low, a high. Maybe you were expecting price to come back to around this area before what we start buying, but all of a sudden price can just come back to this area and it will start pushing to the upside. So what normally do is that when it happen like this, you continue looking for what buying opportunity. There will be another what key level around here, right? There will be another zone around here. So what our price normally doing that if it happen like this, when retracement is coming again, it will come back to this area, the same key level before continuing to the upside. I hope you are getting me. So it's not all the time you're expecting price to come to your interest area. Yours is what? You wait, you have to wait for price to come to your interest area. But when price fail to come there, don't be arguing with the price, because you are not the one controlling. You just wait for what different opportunity, mark a different zone for your what your interest point, because this something like this price may fail, later it will come here, it will push to the upside, later on you could see that price or what will come here and give us what a very strong momentum to the upside. I hope your question is answered. Mr. T. Hello.
Yes, boss, it's very clear now.
Okay, thank you. Israel, do you have any question?
No, sir. No, sir.
Okay.
No, for now.
Do you have question?
No, for now.
Okay,
No,
okay. Your name is what? Mubalaka. Okay. Mohammed, do you have any question?
No, sir, I don't have any.
Okay. Pause, do you have any question?
Yes, I have questions, sir.
Okay, let me hear you.
Concern about the changing of this thing. Can you please come down small? Yeah, around that. Hold on, sir. Around this area.
Mm-hmm.
So, assuming we have a formation of lower lows and lower high like this, and we got a breakout. We got a breakout like this. For me, I used to expect price to come back to this zone, then I will ride up.
The thing is that the psychology behind the movement is that, or sometimes we may be having something like this. Let's say we have a high, a low. I'm coming. Let me. Let's say we have something like this: high, low, high, and then we will having low, then mini high, a low, mini high, a low. I hope you are getting me. A high, and then we will break out from here, right? If it happens something like this, this is whereby you need to look for what? Liquidity, right? This is whereby you need to calculate for what? Your liquidity. And anytime we break out from, let's say, if now we haven't liquidity here, we have a liquidity here, and then we have a liquidity here. I hope you are getting me. So anytime we break out from, let's say, down, liquidity, we grab liquidity from down first, meaning that price will grab this liquidity up here, and then it will start what? Coming down. I hope you are getting me. So when we get a mini, sorry for deleting this one. When we get something like this, let's say this is the mini breakout. When we get something like this, you don't need to expecting price to come back here before you start you start buying. But what you need to do is that you have to wait for a momentum shift, which is maybe a momentum developing of trend before you join in. Because if we break out from there, from let's say this low here, this swing high here, we don't consider it we don't consider this one as a high. Do you know why? Because this high here failed to break out from this low here. It failed to break out from this low here. You could see that it gives us equal price. Since it failed, we can't consider this one. But from here, let's say we're having something here. We are having something here. We're having something here. Since this high here able to break out from this low here, then we can what we need to do is that we have to wait for price to break out from this. We have to wait price to break out from this key level before we start looking for buying opportunity. This is our major our major high, swing high. But this one is not a swing high, it's just a neck. I hope you are getting me. A neck can be a liquidity, which is liquidity grab. So if it happens like this, we are not going to expecting price. It's not all the time price will come. Sometimes it will come here and it will start buying. It will start pushing to the upside. And also it can also come back to this area here, around this area, and it will start pushing to the upside. But what behind this one is that sometimes it will just grab liquidity from that area, And then the next push, the next move will also what? Will grab liquidity from here, right? It will grab liquidity from here before what? Price or what? Will start pushing to the upside here. I hope you are getting me. So when price break out from the mini, whereby let's say a swing high or a swing low, if it does not able to break out from swing high or swing low, we don't consider that thing as a what? Our target of what? Market shift. I hope you are getting me. We don't consider that area as our target of what? Market shift, but we consider that area as what? As a liquidity. We consider that area as what? As a liquidity. So yours is what? Exercise patience, wait for price to break out from this area. This is our recent swing high. So if price able to break out from here, then we can what? We can even it can leave us what? A demand area around this demand zone around here. Then we start what? We expect price to come there, then continuation to the upside. I always scratch you.
Yes, sir, I understand, sir.
Your question is answered, right?
Yes, sir. I have one more question, sir.
Okay, let me hear.
Okay. Assuming we have something like this, assuming price is making lower high, lower lows, lower high, lower lows, and unfortunately we have a lower low, then we have a push up breakout. So assuming you said we should be expecting market to come to this area back before we can buy the trade. So, and let's say assuming we have something like this. And we have equal load like this, equal load. So we are now having a breakout. This is our this is our recent lower high. So you said we shouldn't expect buying from here, right?
Yeah.
So this will now be our major destiny. We should expect price like this before we can buy.
Yeah.
Okay. Now I understand.
Yeah.
But for this one, we can buy here, right?
This one, yeah, this one you can buy.
Okay.
You can buy.
Okay. Now I understand.
Okay, thank you very much.
Because for me, I have to say, because we have already have equal low here, that the market and we have a breakout of structure, that is the recent lower high. I thought the trend is saying that it will be going for long from here.
No, it can be. The reason is that this can be just what a confirmation for this. You see, we were having a key level around this area, which price must be come there before continuing to the downside. But it gives us what inducement around this area. So
yes,
that is why it failed to create another what high, another low. So we don't consider this as our recent swing high. Hope you are getting. So price can just, if you continue pushing to the upside, price what may it may take some liquidity around, or it can push to the downside, take some liquidity around this area before continuing to the upside. But right here, it can just continue to the downside, can give us continuation to the downside. That is why we wait. That's why when it happens something like this, we wait for price to give us what a momentum or development of what trend before we join in.
I understand now, sir. I understand very well now.
Yeah.
Thank you so much, sir.
You are welcome.
Yes, sir.
Okay, Mr. XWYT, do you have any question?
It's clear, boss.
Yeah, let me hear you.
No, it's clear. It's clear. It's clear.
Okay, we thank God. Then we will end here. Let me try to conclude everything. So all what you need before you trade, before you look for your entry opportunities, all what you need is what? 3 things, which is market trend. You have to able to know what is going on. It's very important. You have to able to know what is actually going on in a higher time frame, including monthly and weekly, not only the daily time frame. You have to know what is actually going on there. If able to identify, then just mark what? The recent swing high and swing low from the higher time frame, and knowing that from the higher time frame, are we in the import phase or are you in what? A corrective phase? Before you come to what? Daily 4 hours, then you look for what? A trend, which is shift of market structure, and then like different candlestick patterns before what? You start placing a trade. Okay, may God bless you, or thank you for joining.